Hello everyone, I'm Sahil and welcome back to my channel where I'm tracking my journey to financial freedom. In this short episode, I will be covering the two basic types of investors and the investment strategies out there. In the end, I will also disclose to you what strategy I am using for my personal investing. So let's hit it out. The two basic type of investors are the active investor and the passive investor. Let's talk about the passive investors first. The passive investors to me are like those people who are not really interested in learning how to really invest, but they still want to reap the benefits. Hence, they just give their money out to a third party to invest for them, or maybe in the form of mutual funds, or they would like go for a plan from their bank or something like that. Now, this is completely fine. However, I would highly encourage these types of investors to invest in index funds instead. Index funds that track a broader economy. This doesn't take much efforts, and you can also pair it up with dollar cost averaging, so you don't even have to time the market. Dollar cost averaging is a concept where you invest the same dollar amount at regular interval irrespective of what the stock price is. For example, investing $1,000 a month into S&P 500, which is an index that tracks the biggest 500 companies in America. Nowadays, all the banks out there that you might have your savings account with can automate this for you, so you basically have to do nothing for it. That's why it's called the passive type of investing. So let's move on to the next type of investor, the active investor. These type of investors are really interested in learning how to invest, and they play an active role in picking the winners from the whole basket. So they focus their investments into these winners in the hope that they would make more gains than the average market. Since you have put in efforts into looking for investment related videos on YouTube and you are spending your time watching me, I would like to believe that you are an active investor, or you would like to be an active investor at least. However, I would like to highlight that most of the active investors end up making less than passive investors. But then you might ask, why would we even do active investing? Well, that's because it is an important step to learn. Take it as an investment into yourself, an investment to learn. You need the knowledge, but you also need the abilities. These abilities only come when you get your hands down and actually do the shit. This takes time. Once you have your knowledge and ability sharpened up with experience, you will be making more than the average returns for sure. Now let's look into the three main types of investment strategies that the active investors use. The first one is value investing, then growth investing, and the last one is the income investing. Value investing is made famous by Warren Buffett. In this strategy, you invest into a company when it's trading below its net asset value. For example, if a company owns 10 properties and each property is valued at $1 million, 10 properties would be $10 million. But for some reason, the company itself is trading below that, maybe at $7 million. So the value investors will go in and buy this company. These companies are often the boring companies that have been overlooked, or there have been a bad news about the company and the market is just overreacting. So these type of investors actually do a very deep analysis of the company to come up with the intrinsic value, and they find an opportunity to buy the company when it's trading on a sale. Now moving on to growth investing. In this style of investing, the investor's main focus is capital gains. Hence, they mostly invest into small or medium cap companies which have a potential to grow exponentially in a relatively short duration. Nowadays, when you're talking about growth investing, you're most probably thinking about tech stocks. And this type of investment is also popular amongst the young new investors, since they have very low capital and the balls are itchy and tempted with the huge gains. Not just them, I believe it's the YouTube community as well. They promote this style of investment a lot. Maybe it's just because it's exciting, like gambling, you may lose, but you can also win a shit ton of money. Okay, so the next one is the income investing. This is the safety first kind of strategy and more suited for the older people who are already in their retirement age and are looking for safe returns to cover their expenses. So what you're looking at over here is dividends, fixed incomes, or a rental income. Now with all the basics covered, it's time that I reveal my personal investment strategy. So basically, I don't stick with one, but rather use all three in proportions that suit my chill life, good life personality. My type of investment strategy was recently given a name, the dividend growth investing. And this type of strategy highly leverages on the effects of compounding. For some of you who do not know what dividends are, They are basically a part of the profit which the company gives to their owners. Since you are a shareholder, you are a part owner of the company, even though super small. So you are entitled to this dividend just by having your lazy ass sit on the shares. So I invest for dividends, but only in companies that have a good growth potential and also are at a value when I purchase them. My strategy is also to diversify into all the sectors with time. There's always one sector that is struggling and the companies within it are at a great discount. Since I have a very long time to invest, I believe I would be able to see a downturn for almost all the sectors, and that's the time that I would load up a particular sector. Also, I only invest in the Asian market, mostly Singapore and Hong Kong, and I hold 0 US stocks, so no Tesla if you were wondering. Okay, so that's all for today's episode. In the next one, I will share my personal stock portfolio with you guys. Like always, if you're interested, just subscribe. Stay tuned until the next video. Ciao.